Here are top 5 disadvantages of fund of funds. Before moving on to the disadvantages, let me tell you what does a fund of fund actually does. A fund of fund क्या करता है? They take money from you and then that fund will invest into different funds to diversify the portfolio. For example, if you are giving 10 rupees in one particular fund of fund, so that 10 rupees would be split across various different funds, say 2 rupees each into 5 different funds. This will give you a diversified portfolio. This will manage risk, but there are some disadvantages. So here let's talk about 5 major disadvantages that fund of fund has. On number 1, we have double layering of fees, which is the most important drawback. So in a fund of fund, you pay fees to the fund of fund manager, and then you also have to pay the fees to the funds in which they are investing in. So this is double layering of fees. Even if the fund of fund negotiates the fees, the structure naturally creates that investor has to pay a little higher on the fee. The second disadvantage in fund of fund is limited control over the underlying investments. So investors cannot choose which fund gets how much capital, exact timing of the deployment, and sector or the stage exposure. This is one disadvantage. You have to entirely rely on your fund of fund manager to take the prompt and the informed decisions. The third is returns get averaged out. Since a fund of fund invests in multiple venture capital, private equity funds, the performance becomes more stable but it's less explosive. So your returns get also averaged out. This means that you rarely hit outlier returns because winners also get diluted by average performers. The fourth disadvantage that we have is longer liquidity cycles. So fund of fund depends on when underlying funds call capital, when underlying funds take exit, and when the distribution flows back. This creates a longer holding periods versus single fund investing. Since fund of fund has an extra layer in the middle, which is the fund of fund manager which is managing that particular fund. Then the fifth and the last disadvantage is transparency is lower compared to direct private equity or venture capital investing. So you often don't see full details of underlying portfolio companies, deal level data, what is exactly happening, and exact valuation logic. So information flows from underlying fund to fund of fund, and then it is passed on to the investor, which means lower visibility. It can be one disadvantage, but let me tell you that there are some interesting offerings in fund of fund, because if you have limited capital and if you are still want to take the exposure into private equity or venture capital, then ultimately the best thing is to go through a fund of fund structure. And we have asked all these questions from the fund manager. We have done a webinar also with the fund of fund manager, and we have asked all these questions, all these disadvantages, and you will be glad to see how that fund manager has answered all these disadvantages and how they are catering to take care of all the disadvantages that we have talked about. Thank you so much for watching our video. In case if you are exploring PMS and AIF options, you can get in touch with us. Thank you.